All right, y'all. Today, I just want to make this based on my experience of doing this for 7 years. I see a lot of questions that people do and don't ask when we're going through this process, and a lot of false assumptions exist out there. A lot of y'all are, think you already know the process before you get to it. Some of you think you're self-underwriters. You think you would know the answers. You think some of this stuff is straightforward and just second nature, but that's not always the case. So I just want to give you guys a couple of things to ask me when you guys are doing this. These questions are going to be a lot better than, hey, what's the rate for the given day? Because, when you don't have a homeowner contract or ratified sales contract on a property, you have nothing to lock in. So rate is really irrelevant until then. But just because you heard something from your friend doesn't mean it's necessarily true. Everybody's situation is different. I want you guys to be able to ask me these questions so it'll give you guys a better understanding and give you guys a better experience. But even before all that, I want you guys to go watch my first time buyer playlist if you haven't already. It's going to teach you everything that I would want to know if I didn't know any of this stuff at all myself. So it's in the playlist section. It's about an hour long if you watch it on 1.5 speed, breaks it down to 40 minutes. It's about 49 quick videos, all 60 to 90 seconds long. But let's get started, guys. So number one question I think y'all should be asking is, does my income even qualify? Okay. So a lot of you guys are on contract pay. Maybe you guys are self-employed. You guys are getting bonus money, alimony, child support. You've got to have had that for at least 2 or 3 years, depending on what it is. And we have to see at least a 3-year continuance for some of it, meaning that we think that there's reason to believe that you're going to be getting that for at least another 3 years, barring you getting let go or fired for any reason from your job. But not all income is just qualifiable right away. It's not just easy slam dunk. Don't think like that. There's a lot of you guys where it won't end up qualifying, but that's okay. It still sometimes takes time for you guys in that instance. So second thing I think you guys should be asking is, can I switch jobs? If you do at some points before you even qualify, before we even talk about this stuff, it could wreck your chances of qualifying because, like I said in number one, sometimes you got to have certain types of income for a set period of time. Most of the incomes that you guys have are qualifiable right away because you have a guaranteed amount of money that you're supposed to make every month or week. But if you guys get a new type of sales role in a different industry and it's mostly commission, or you were using a lot of overtime income at the past job, you guys move to a new job and that could be gone right away. So things like that can happen. Number three thing I think you guys should be asking is, can I use the money that I have for closing? There's any big recent deposit into your bank accounts over the last 2 months, we've got to vet that. And if it's going to be a gift coming from overseas, there's going to be a lot more documentation we need to see around that. It's going to be a little tougher to get. Crypto money, money from a friend, just cash on hand. Some of these things are tough or don't even qualify at all. So you got to talk to me first for that to figure that out. Number 4 question is, can I apply? Guys, that is really the only way you're going to figure out if you actually qualify or not. We got to run you through this algorithm at Fannie Mae and Freddie Mac and the VA, the FHA, to get a response back from them to get a yes or no on you. So never assume that you're going to qualify. And the only way to figure that out is if you do an actual application. Number 5 thing I want you guys to be asking is, when should I apply? Okay, so when you guys apply, you have a hard credit pull that lasts for 4 months. If you want to get information, but you guys don't think you're going to close on a home anytime soon within those 4 months, then it's probably not a good idea to apply and do a hard credit pull. Now, I can do a soft credit pull for you in the meantime. I'm not going to give you 100% of the information that we want, but it's still going to give you a good idea. So you can do that like in advance to game plan. Number 6 thing I think you guys should be asking is, do you qualify? Again, don't assume that you guys are going to qualify. Even if you make income, even if you have money, these underwriting rules can be strict. They can really be a pain. After 2008, it really tightened up. So again, talk to a lender first. Seventh thing I think you guys should be asking is, should I pay off this piece of debt or not? Because a lot of times people will pay off debt or pay down debt where they didn't even need to in order to qualify. Really, the only way you figure that out is after we do an application. Guys, I'm gonna be very repetitive in this video. I've got a couple more of these questions to go. You're probably gonna hear it a couple more times, but once you apply and I see your credit report, and after that, I can tell you then, hey, it's going to affect your debt to income ratio by this much if you can get rid of that debt, or if it's going to increase your credit score by this much if you get rid of that debt. So I can tell you those things after the application. That's probably more appropriate of a time to pay down that debt if you're going to do it at all. So that's number 7. Number 8 thing I think you should ask is, can I use a cosigner? A lot of you guys don't really know that if you're going into this alone, or if you don't have enough income to qualify for what you want, you can use someone's income, like a parent, to qualify on the application, to then use that to meet your debt to income ratio. Make sure you have enough money coming in every month to satisfy the monthly payment of the house and any other debts that you have. So they can hop on the application with you too. So that's number 8. And then number 9 is, what credit score do I need? A lot of you guys think that you guys need like some perfect credit score. You don't need perfect credit. You don't need great credit or good credit necessarily. Most cases, you just need credit. A lot of people, they might not even have much of a credit history built up, and you're in good shoes if you can still get something in the high 600s in a lot of cases. So you want to shoot for at least that on a credit score, but don't think that you have to have something perfect or that you have to perfect your credit score before you come to me and apply. So that's number 9. And then number 10 is, what's the least I can use for my down payment? Obviously don't need 20% down on a home. I think the average down payment on a house in this country is something like 12 to 13%. That's for all buyers. And then for first-time home buyers, it's about 6 to 7% down. Conventional, you can use as little as 5 or 3% down. FHA, 3.5% down. And then there's special state and local programs that you can use to go even lower, get 0%, or if you're a veteran, you can do 0 as well. So I hope that's going to help you make much better questions, get much better information for yourself, to make sure that you're prepared well in advance of when you're trying to make this home purchase. Guys, thank you very much. Let me know if there's more questions that you have for me, and be sure to watch the next video. Thank you.